Now let's come to next important Greek, which is theta. Theta means change in option premiums with time passage of 1 day. What we get from theta? We have studied that options are vesting assets. What is meaning of that? Value of options reduces with time. There is fixed time for expiry. Every Thursday is expiry for weekly expiry in index options, and every last Thursday of month is expiry day for stock options as well as monthly expiry of options of indices. Till that time, theta is god of value associated with time. Theta decides how much will be decrease in price of an option as time passes. So if everything else remains same till expiry, means if volatility remains same, spot expires at same level, even then theta will lead to erosion of option premiums. Means suppose Nifty is at 17,000 now, and on next day it goes up to 17,300, comes down to 16,700, and near end of the day again it is at 17,000 levels. During this time, what will happen? Option premiums will increase, decrease, their intrinsic values will increase, decrease, but theta decay will happen, and premiums of both calls as well as puts will get eroded due to theta decay. If there is no change in volatility, then both puts and calls will have lesser premiums at the end of the day due to passing of 1 day. Premium in calls and puts will be yesterday's premium minus theta value. Theta is very simple. With 1 day, price will reduce by theta number. That is fixed and nobody can avoid this decay. This way, theta is always friend of an option seller and enemy of an option buyer. Theta decay works every day and it is exponential in character. When there is lot of time for expiry, theta decay will be very small. When there is short duration left for expiry, theta decay is very rapid. This sentence is very important. When there is lot of time to expiry, theta decay will be very small. When there is small duration left for expiry, theta decay is very rapid. Now let us see how to interpret theta. As time passes, options are bound to lose their value. Time has value, and shorter the time, rapidly it goes out of hand. You remember during our college life we have full year to study and we relax. In last month or so we think of studying. In last 15 days we study more, and in last 2 days it's a panic mode. Theta is similar. It relaxes when there is lot of time, but it works fast when time is less. This way, theta is neither constant nor it is linear. More time value and more time means less theta decay. Less time and less time value means rapid decay. And this is applicable for calls as well as puts. Theta works mainly to erode option premium so that extrinsic value becomes 0 at expiry. Now this statement is very important. For an option seller, best time to sell an option is when expiry is closer, but because there will be faster decay. And best time for option buyer, reverse will be true. Farther the expiry, less will be theta decay. So option buyer should choose as long time to expiry as possible for options trade. So option buyer should choose as long as possible time period for expiry for options trade. This is very important to understand. Most of the traders do exactly opposite. They sell options of longer duration because there is more premium in those options. When they buy, they choose closer to expiry because extrinsic value is comparatively low in current expiry. Am I right or wrong? For positional trading with long time frame for targets, it is always better to buy options with longer expiry. These options have less theta decay. In option buying, theta decay is against us, and to reduce this risk, we need to buy options as far as possible in terms of expiry and not in terms of strike. 90 days time to expiry is advisable because they have low theta. This rule is for positional buying on larger time frame, not for intraday trades. Means if you have big targets of 20 to 30% up move in a month or two, then option buying in same expiry will be futile. In India, stock options have liquidity only in current month and sometimes in next month. Next month liquidity starts developing only after second week of current month, which usually means around 45 days to expiry. This is also in very few selected stocks, not in all stocks. In USA, liquidity is better in long-term stock options as well. Because of this reason, naked buying in stock options with view of more than 2 weeks for target may backfire. That will be because of theta decay. Does this make sense? Do you agree on this? Now let's come to theta correlation with options. Both options, calls as well as puts, are negatively correlated to theta. What is meaning of this? Can anyone tell? Options are negatively correlated means theta will have negative effect on prices of options. Both option prices will keep decreasing as time passes. Theta will eat into extrinsic value of an option. So option buyer will always face theta decay problem, and theta is enemy of an option buyer. On the other hand, option seller will always get help from theta. This means for long position in options, theta is always negative, and for short position in options, theta is always positive. Option sellers will gain profits with passage of time, even without movement in underlying. Option buyer may lose profits even with favorable move if move is not sufficient enough to cover theta decay. Now, do you understand why there are losses possible in option buying even when underlying moves in direction as anticipated? Theta is one culprit. Another may be vega, volatility. Longer the time of an option has till expiry, less is the price affected by theta. This is important concept, because when option has longer time to expiry, it has more extrinsic value, it has more time value, and out of that value, small portion is affected by theta. So it is better to buy options with minimum 90 days to expiry and sell options with less than 45 days to expiry. Keep this in mind. It is better to buy options with minimum 90 days to expiry when we are looking for positional buying. and it is better to sell options with less than 45 days to expiry when we are looking for positional selling. This is not for intraday. Please don't get confused. In the money options have less exposure to theta as they have less extrinsic value. So it is better to buy in the money options instead of buying at the money options or out of the money options, especially for positional trades. Even for short-term intraday trades, it is better to buy in the money options. Out of the money options have more exposure to theta as complete premium has potential to get eroded. So while selling options, it is better to sell out of the money options. Option buying means we are buying a product which has tendency to decay and we need to keep decay in control. In the money options have less decay and far expiry options have less decay as compared to out of the money options and near expiry options. Do you get this point? In the money options have less decay and far expiry options have less decay because of theta as compared to out of the money options and near expiry options. So these are important points about theta. This is another major Greek which affects option prices, but it is relatively simple. It is simplest theta among vega and delta. Now let us study vega. So one should sell near expiry, one should buy far expiry, should buy in the money options, and one should sell out of the money options. What are common mistakes in option trading? Rules says that we should buy far month options 90 days at least if possible. But what happens in Indian markets? There is no liquidity in stocks for far month options. Liquidity comes only after 45 days. In this scenario, what do? We tend to buy near expiry option, current expiry option. We don't even buy next month option. We buy current expiry option. So this is very common mistake which happens. Are there any questions or any doubts related to theta? Now let us see some examples on option chain and we'll discuss about theta and its effect on option chain in various expiries.